ready?
Yes, let's go.
All right. Hi, I'm Rob Barnett, a senior analyst at Bloomberg Intelligence. Today we're trying something new. We're going to have a long-form conversation with my colleague Salih Yilmaz here in Bloomberg's podcast studio in London. And we're not just going to talk about what's happening today. We're going to talk about the big picture. You've been in the business for really 10 plus years now. You've been mostly looking at the oil and gas industry, some refiners, a few other folks like that. And when you think about your time and what you've worked on, what is a thing that surprised you the most over the course of your career thus far? And then a follow-up is, what are you most excited about in terms of your research franchise looking out over the next few years?
Sure. I mean, this is a question that I've been kind of asking myself since the beginning of my career as well. And in the very beginning, from the very beginning, I really enjoyed looking at the energy sector, looking at the oil and gas sector. But there was a point where I thought I was asking myself whether this is the best sector to build my career about, because we know that the future will have to be more sustainable, and we don't really know how much importance there will be for oil and around fossil fuels in general. So I think the most surprising thing for me from just the beginning of my career to now is how kind of the energy transition and what the companies are doing about it, and how these companies are transforming themselves is something that's been kind of very interesting, and that's kind of reassured me that, okay, maybe oil demand will be lower in the future, but still these companies are not just going to disappear. They may not be doing exactly the same thing that they're doing now in 10 years time, 15 years time. But that doesn't mean that the things that I've been trying to learn, I've been trying to build my career about, are just going to be completely useless. I think fossil fuels will continue to be important even through energy transition. And these companies that I cover are just going to transform themselves into different companies. And it's just, I went from kind of worrying about my career a little bit because of covering some fossil fuel producers, to almost being quite excited about the transformation and the transition and the different kind of paths and strategies that these companies are taking. So it really did go from being worried to being quite kind of thrilled and very excited about what these companies do, and kind of building my expertise around these companies and like knowing more about them, just to be able to write about the different things that they're doing and which ones may be better positioned, etc.
I know that the energy and oil patch really hate the analogy, but do you think there's potential for a Kodak moment, or do you think most of these businesses are robust, they can see what's on the horizon, and they're going to make the transition? Or do you think that there's some real risk that some of these companies are going to miss the trend and won't take action until it's too late to steer in a different direction?
So, I mean, I don't think there's going to be a big Kodak moment for any of them. I mean, as I said, companies are all taking slightly different paths in terms of energy transition, and we'll see which ones will turn out to be better than others. I mean, we, at least in Europe, we have, and I'm talking about some of the oil majors, but both the big ones like BP, Shell, and some of the mid-sized ones like OMV, Repsol. And we know some of them are going down the path of just kind of renewable, low carbon power generation. And then some of them are doubling down on downstream and kind of expanding further down the downstream value chain into chemicals, petrochemicals, etc. And it's not quite clear, which one is the better route, which of these companies will come out in a better position. But I think they're all aware of the need for them to start kind of earmarking more spending into some of these technologies, not just back into the fossil fuel business. And slowly but surely, they are doing it. And that's why I don't think there will be a huge Kodak moment for them, because they're very much aware that they need to diversify away from their legacy business. And they are doing that. And I think energy transition is going to be a multi-decade long kind of process. And that gives them a little bit of time to kind of slowly change their strategies and kind of slowly kind of divest perhaps some of their legacy businesses and shift their focus into these newer fields.
Couldn't agree more with the idea that the energy transition is going to take quite a few decades. 2050 might even be ambitious, but that's the goal that a lot of the policymakers are talking about. You mentioned Europe, and for anyone who's listening who knows your franchise, you're getting ready very soon to move to Dubai. We're really going to miss you here in London. I know I'm going to personally miss you a lot. Do you think people and our clients, but the energy industry generally, is going to be receptive to that message and that kind of narrative once you get to the Middle East? Or do you think that there's going to be a much stronger pro-fossil fuel bias that you're going to just have to get on board with to be relevant there?
Well, I mean, first of all, I will miss the team and personally yourself as well once I move to Dubai next week. I think about your question, I think there is certainly an oil bias in the region, but I don't think they are completely kind of against the idea of the need to transition and to transform some of these national oil companies as well. I mean, when you look at Aramco, for example, which is the biggest listed oil company in the world, I think the biggest listed company in the world, unless Apple took over by market cap again. And even that company that produces more than 10 million, actually almost 11 million barrels per day of crude oil, obviously oil is hugely important for them. But what we are seeing, especially in the last few years, is them starting to talk about things like hydrogen. They have acquired SABIC. We know they are going to invest a lot more into downstream, especially chemicals. So, I mean, sure, they are very much heavily invested in oil. They are increasing their oil production capacity, the maximum sustainable capacity at which they can produce crude oil from 12 million to 13 million barrels per day. So they're not quite shifting their focus completely away from fossil fuels, especially crude oil. But I think even they in the region are aware of the need to diversify away from oil. And that's not just for Aramco. I mean, obviously, Aramco is a hugely important business and company for Saudi Arabia. And this is just one example. I mean, you could the same argument goes for other countries in the Gulf, like the UAE with ADNOC. But for these countries as well, I think they are very much aware that being so dependent on oil is not a good long-term strategy. And that's why we are seeing them getting more and more serious about diversifying their economies away from just fossil fuels. And again, this kind of boom cycle that we're seeing in the sector, we don't quite know how long it will last, but it's really kind of helping them helping add to their buffers, which will help them in their efforts to diversify their economies away from oil.
So when you arrive, you're going to be a more frequent driver, I think.
Yeah.
What kind of car do you hope to get? Have you thought through that? I assume it's not going to be an EV, but maybe. Tell us what you're thinking about.
I'm not sure. I mean, it seems like getting a new car is extremely difficult these days. So I will have to probably be looking in the second-hand market. And to be honest, my priority has been finding a flat first. So that's the majority of my kind of primary research before I'm there. But just from talking to some of the colleagues there, it seems like in Dubai, I will need a car at some point because public transport isn't quite as developed as what we're used to perhaps in London. I think they're working on it. I think they're adding new stations and perhaps new lines in the future. But I will definitely need a car. I don't think it's going to be an EV, partly because I don't think the infrastructure is quite there yet. Again, I don't actually know much about this, but I presume from the couple of times that I've been in the country in the last few years, I haven't really seen the infrastructure that perhaps I saw in Norway and we discussed about just this past summer in terms of just charging an EV if I did have an EV. And also, I mean, getting an internal combustion engine car probably would make a lot more sense because there are a lot less, and I believe no taxes on fuels. So I did have a car here in the UK, which I didn't really use, but when I did use it and when I had to fill up the tank, it was quite expensive, even though I had a very small car. I think there I will be positively surprised at how much less it costs to fill up the tank. So I don't know which car it will be, but I think sooner rather than later I will have to ramp up my research and find a car for myself.
It's funny that you mentioned the public transit system. One of the things I love doing when I go to a new city is getting off at the airport and seeing if I can get where I need to go on the trains, and it doesn't always work out, and usually I only do it if I have enough time. But I did ride the train system or transit system there in Dubai, and it was pretty nice. I took it to the mall one time, the big one by the Burj. So I think it should be nice. One of the things that sort of sticks in my mind from a last trip I did to that region was we're holding these series of seminars, and we talked about the big picture questions of energy, future oil demand, future oil supply, what's the supply-demand balance look like? And we've been running for years now at Bloomberg Intelligence a survey where we ask our customers, when do they think oil demand's going to peak? And the answers are pretty interesting, and it seems to sway a little bit depending on the prices in the market and sort of the general vibe. But one of the things that struck me is in several of those meetings in the region, we kind of had a spectrum of answers, 2025, 2030, so on down the line, and a distribution of where our customers were at. And in several of those meetings, hands went up and said, well, you don't have, it already has. And so I think that there's a big concern in the region about, is demand going to be there? It certainly looks like it is for the near term. But what's your sense on the general view on oil demand going forward? What does the industry need to really be doing to think about the future on the demand side, and what, give us a sense of what you think the decline rate looks like? So, how much do you need to invest even if you had a radical scenario, let's say, where oil demand's flat for the next few years?
Yeah, I mean, that's very interesting. I remember you told me about that story, and after that, we ran that survey a couple more times, and we did actually add that option, which quite a few people actually selected as well, that the oil demand may have already peaked. My personal opinion is that oil demand is probably going to peak before 2030. But one important caveat there is that it's very much possible that we see a peak, but then we stay there for a little while. So it's possible that we hit that peak level before 2030, but stay there until after 2030. I think obviously this is hugely important. And even as you said, oil demand is flat. We still need a lot of investment in upstream, which we know the level by the oil majors is going down, especially as some of these companies, as I mentioned earlier, they're just shifting their focus away from upstream, which means that they are kind of earmarking a bigger portion of their capital spending into low carbon businesses, into these new businesses that they're taking on, which means that the total spending across the sector is not what it used to be perhaps 6-7 years ago. And as you said, there's a certain level of spending that we need just to make up for the between 2 to 4% of natural decline rates that we have in the global supply. And obviously demand is important, but supply is important as well. And what's really driving the market is where the balance, the supply-demand balance is in the market. But I think one thing that I think the region has to its advantage is once the demand starts going down, we will have kind of obviously lower prices, and perhaps that's going to start shaving off some of the higher cost production of the market. But the really one of the biggest advantages in the region, especially in places like the UAE, like Saudi Arabia, is the extremely low production costs. So in terms of fiscally breaking even, these countries, because they are so dependent on oil, they need more than $70 a barrel, according to some IMF estimates, to fiscally break even. But operationally, it actually costs them a lot less. So just thinking about the cost curve, it's very much possible that we have lower demand by 2035, 2040, and we have much lower production from some of the higher cost regions, perhaps some of the offshore production. And we end up in a still undersupplied market with good, decent pricing, with just higher market share by some of these Gulf producers. That is also a scenario that could play out. So we always kind of focus on the demand side of the equation with our questions, because I think that's the big question that everyone is wondering. But it's always important, I think, to keep in mind that it is also very important where supply is, which needs a lot of spending, as you said, that we might just be losing in the next 5-10 years, and then that might just take the balance in the market and keep it in a deficit still, even though we may have much lower demand levels.
One of the fun things about doing commodity focused research is that there's this real emphasis on supply and demand, and most of us almost approach the business in a textbook sense. We kind of say, well, where's demand at? Where's supply at? And we try to get a directional sense of the market based on whether we're in a deficit or a surplus. But I want to probe on that a little bit, because we've had some fun conversations about whether the supply-demand balance really fits into a econometric or financial framework for thinking about the oil price. What are the other variables that matter in addition to supply-demand? And do you think supply-demand at any given moment really is something that tips the market one way or the other?
Yeah, I mean, I think it's a really good question, and I would have said yes, perhaps a couple of weeks ago, but we actually have a project going on right now with our data science team that's trying to kind of have a good regression fit for oil prices in the last 12 years. And it's obviously been a trial and error with a lot of independent variables, and a lot of I actually spent a lot of time on trying to figure out where the supply-demand balance is for the crude oil market. I spent a lot of time writing about spare capacity, where that is, and how that's important for oil prices. And ironically, the results that we've found so far is that at least in the last 12 years, these really haven't been some of the most important variables for the oil price. Interestingly, I mean, dollar is something that we always talk about. We know it's quite important, and it did actually end up being one of the most important variables. And I mean, we know recently dollar has been very strong, and arguably that has been one of the reasons keeping a lid on oil prices. Inventory levels, perhaps not so surprisingly, is turning out to be quite important. Recently IEA had a very interesting chart on one of their reports showing that very close relationship. And our results show that that's also quite important. Refining margins, we have crack spreads on our model, which seems to be quite important as well. We have money supply, so the monetary policy seems to be quite important. So I thought this was a fascinating project. It didn't quite turn out to be the way I thought it would, and almost a bit disappointing for me to see what I thought would be most important for oil prices isn't quite the case. But you could also argue that one big debate recently has been, and this is what we heard the Saudi Arabia energy minister Abdulaziz bin Salman talk about as well, was the divergence between financial market and physical market. And I think this is exactly why we may see very little correlation between where the balance might be and where oil prices is, because right now, everybody is shouting that physical market is very tight. Most indicators suggest, perhaps not so much now, but a few weeks ago, we had every indicator telling us that it's a very, very tight market, but instead oil prices just kept going down. We saw Brent prices go down below $90 a barrel at some point. So it's just been a very interesting project, and I am planning to write on this in the next few weeks. But yeah, the results have been quite fascinating.
One of the things that you mentioned is BQuant, or statistical regressions using some of the APIs and coding tools that are available. I'm currently taking some Python courses here to try and bring a more quantitative skill set to bear on some of the work we're doing. And we've recently launched what we call Bloomberg Intelligence interactive calculators, where our clients can go and drill down on a company, and via an Excel-based model that's API linked, you can put in your own assumptions for production for a company, realized prices, this sort of thing if you're thinking about a company in the oil patch. When you think about an individual company, how often or how frequently do you think some of the assumptions you might put into your own model or scenario that you might be running, how often do you see a divergence from where consensus is at? And the real question is, given commodities are super volatile, they move very rapidly, how good is consensus for some of the companies that are affected by those commodities at adjusting as those prices move?
Yeah, good question. And obviously just a reminder that we love talking about commodities. We love talking about kind of some of the macro stuff like OPEC. But at the core of what we do here in BI is company research. And we spend a lot of our time kind of looking and analyzing some of these companies in detail. And so in terms of consensus, when you look at these companies, this is a very big part of what we do, is to kind of watch consensus and see if, it's not that often that we see a huge divergence in what we think versus consensus. And when there is a divergence, that's probably a reminder for us to probably write something on it, because if we feel strongly about an indicator for a company that's diverging in a positive or negative way from consensus, that's probably telling us that there is what we call focus idea, where we write about these companies to say, look, we think consensus is understating or overstating this particular kind of realized price or the refining throughput level or the upstream output level. And these calculators is a great tool for us as well as I think for our clients to play around with these, because the way we built these calculators is that it's running on the consensus numbers. And if you think that consensus is off in any of these assumption boxes, then these calculators give you the option to kind of play around with those numbers and see what the impact would be on financial metrics like the EBITDA or the bottom line or the EPS. And I mean, I am currently working on one for Repsol, which is the Spanish oil major, where I think they have great exposure to the very good refining margins that we see, the very high natural gas prices that we see, and just looking more closely at consensus, my thinking was that the consensus may be a little bit, may either be understating these numbers, or they may be a little bit late to update these numbers. So generally, I mean, what we do as kind of equity research analysts is a lot of kind of watching these companies very closely, watching some of these some metrics that are very important very closely, and with kind of consensus numbers in mind, with kind of valuation metrics in mind, etc. And I think we've always kind of run our shadow models where, like we would have the consensus numbers in there, we would have our own numbers in there. But I think this calculator initiative is great, both for us and, again, for our clients, because that really gives you the tool to kind of put some numbers into your thoughts and just see the impact that these kind of changes in kind of at the top of your model, what they mean for your bottom line.
Yeah, for anyone who doesn't know, at BI, we cover roughly 2,000 companies. That number always moving up target. And for those 2,000 companies, we have a primer that you can go read, get up to speed on an individual company really quickly. And it's a pretty interesting and rewarding job, I think, because you sit in front of an Excel and you try to sort of make a scenario, make a projection using math or guidance or sort of thoughts on where things could go in the future. And everything that we put out really stands on quantitative reasoning and kind of taking something that's maybe in an Excel workbook or in a terminal function and then trying to sort of say, well, now what's the investment implications of this? And it's a very fascinating job from that perspective. I know we have, particularly since this will go up on YouTube, we have folks who will watch it who are maybe younger, interested in research and analysis. So give us a sense of, I know your background, but how did you end up here? What did you study in school to ultimately land at this sort of professional job of making projections with numbers and then telling that story?
Sure. So, my educational background was actually economics for undergraduate, and then I did a master's in finance. While doing the economics degree, I knew that I was just fascinated by the financial markets and kind of stocks and kind of picking stocks. And like from a very early age, I was just very curious about like what makes a good company, like what what makes a good company versus not a great company versus peer groups, etc. And from there on, I knew that I wanted to learn a lot more about finance. So that's why I did a master's degree in finance. And from there onwards, I did a few internships at some investment banks, and I really liked being in kind of on the street, and I knew I wanted to do something along those lines. And then I joined Bloomberg. I was actually initially in the M&A team in global data, kind of trying to help build the M&A product that sits within the terminal. And this was around the time when BI in Europe, in London, was just starting out. And pretty early on, I met some of the analysts that BI hired, and just talking to them because they were actually using the M&A function on the terminal for their research. And I mean, I knew about equity research, but at the time I was a lot more focused on kind of the investment banking and M&A and IPO side of things, kind of the corporate side of things. But then meeting these guys and kind of seeing that what they do is just kind of focus on a certain sector, a certain list of companies, and just building expertise, building know-how on those companies, become the expert in those companies, was just very exciting for me. And pretty early on, I mean, I led everyone in that team, which at the time was quite small. That, I mean, this is where I want to be. This is where I have to be. And I think the passion I had at the time was quite visible and was quite obvious to the managers in the team. So then I was hired into Bloomberg Intelligence, and as an associate, and from there onwards, I just kind of started to build on coverage of some of the oil and gas companies. And since then, I've just been covering oil and gas. I started with some downstream names, which are much smaller by market cap in Europe. And then I started adding some of the mid-sized integrateds, which not only refine, but also have some upstream operations as well. And as we were talking about earlier, now these are the companies that are expanding into other businesses as well, such as power generation, such as chemicals, such as hydrogen, such as EV charging stations, etc. So it's been my career is relatively short, I think, in the sector, but it's just been incredibly exciting. And you know, when I was being interviewed for the role, I actually asked, like, what does it take to be like a really good analyst? What does it take to become a senior analyst, and a good one at that? And I remember the answer was, it really helps when you've been through like one full cycle. And I was asking, okay, how long does that take? And the answer was, and this was the analyst that covered consumer, he said, yeah, probably at least like 5 to 10 years. And I feel like covering commodities, just in the last like 8 years, we've been through way more cycles than just a couple. And I think it's just been, obviously it's kept us very busy. It's kept us very never bored. But I mean, I love the sector. And as I said, in the beginning, I was kind of worried, am I covering a sector that's just dying? Is this the right thing for me? But I was wrong. I think because this is a sector that's not dying, it's just a sector that's in transition, it's actually turned out to be a very exciting sector to cover. And to be honest, what we do is not easy for those who are really wondering about what it might be like, because having a coverage of a certain sector, having a coverage of a list of companies, means that you are the go-to person for those. And it really does mean that you never really, you can't just shut off and, take a 2-week holiday without checking the news. Unfortunately, even during holidays, we check news to see if there's any big M&A, if there's something going on with our companies, if there's something big geopolitical going on. But on the flip side, for me, to become the go-to person, to be the expert in a certain field, is quite exciting, and that's just what makes what we do really, really fascinating to me.
Yeah, it made me chuckle a little bit. I remember getting a text message on a bank holiday earlier this year from our director of research here in London saying, "Hey, get up. You got to write a react." This is our rapid fire response, something that happened to, I believe it was Vestas. I've already forgotten what the incident was, but you never really get a proper day off in this sense. But if you love this stuff, it's really fun. And to your point, we have seen so many interesting and unprecedented things. I mean, I remember when we were just at the beginning of COVID, some of those last days where we were in the office for a while, just going, gosh, how bad is this thing going to be? We got to the other side of that, and as immediately as we were coming out of it, we entered this unprecedented energy or gas and power kind of crisis here in Europe. So it's really going to be interesting to see how it unfolds. I think it's great that you've really started and progressed here. So, from an associate to a senior analyst in a relatively short amount of time, and now covering Saudi Aramco even. So very, very exciting what you've been able to achieve here. So I think it's about time to wrap up, but a couple more questions. Given you're about to be in Dubai, so anyone listening, reach out and say hello to Salih. He's active on Twitter. You can easily find him on the terminal. But what are you most excited about for Dubai, and what are you going to miss the most about London?
So what I'm most excited about, I think, is kind of doing a lot more, doing a lot more on the commercial side of things. I think being in the region is being in the region that where oil is obviously very important, energy is very important. I think this will give me the opportunity to work more closely with our colleagues or in sales, perhaps or in media. I suspect that I'll get a lot more opportunities to be doing a lot more of those.
By the way, I was talking about personally. I thought it was going to be skydiving, picking up some cool new hobby that's not, available here in London. Those things are great too.
Yeah, I mean, sure. Personally, skydive is something that's quite special apparently in Dubai. I'm not sure if I am kind of brave enough to do it, but we'll see. I am very excited about the climate, to be honest. I know a lot of people argue that it's way too hot, but for me, I grew up in a very sunny place, and while in London, I really did miss the sun. So I'm just very excited to be in shorts and t-shirts most of the time throughout the year. And obviously, I'm gonna be missing you guys quite a lot. I think the team here that we have, I mean, the company in general, I think Bloomberg is just such a great place to be, and especially if you're in one of the headquarters, like in London, like in New York, you're surrounded by just amazing people, and that exposure really teaches you a lot, and it's just a lot of fun, I think. I mean, Dubai is a relatively big office, I think, and apparently expanding. I know quite a few people there already who are really amazing people too. But to be honest, I think the energy team that we have here, including yourself, will be dearly missed. But yeah, I think because luckily I'm still going to be part of the team here in London, I am hoping, especially during the summer months when it's way too hot there, I'm hoping to be back in London. Hopefully for a prolonged period of time, but we will see. But yeah, generally it's quite bittersweet to be leaving London, to be leaving the London office. But I'm just quite excited to try something new and get myself out of my comfort zone a little bit.
It's always a good thing to reinvent yourself, and I'm glad you're able to do it in a way that keeps us working together. So make sure you follow Salih on Twitter. He's very active there. He's a great voice on the oil market. You can find all of his research by visiting BI Go on the terminal. And by the way, if you, in addition to running BI, there's just so many ways you can touch on what we're doing. We have the calculators. If you've never seen one of those, we're happy to show you. Shoot us an IB, talk to us. We hold our bi-monthly calls on the first and third Wednesday of every month. Salih's a regular. I'm usually there. It's a great forum where we get together with the whole team and just have a conversation about topical things happening with our companies or with the markets that we cover. And going forward, we're going to try to have some more kind of one-on-one conversations like this. So hopefully going to have you back on soon. Once you've gotten settled in Dubai, you can tell us about what the experience has been like. And yeah, good luck with everything. We're going to miss you, though, here in London.
Thank you. I'll miss you guys, too.